Okay, welcome to another daily Forex analysis. This is AUDUSD. Let's try and do our analysis and see what we can get from the market when the market open in the next few hours. That is the 8th of July 2026. Okay, before we go into the pair, do well to subscribe to this channel so that you don't miss out on our daily analysis and our daily setup for various pairs before the market open each day. And also, during the weekend, we do the analysis for the next week, the week to come. We do the weekly outlook so that we can have a good knowledge of what the market is going to do when the market open for that week. So yesterday, if you recall, or you can go back to the video, I told us that I will be looking for some level of retracement. I'll be looking for some level of retracement to this area before I will look for a buying opportunity. If I don't see any level of retracement, I am not going to buy the market here. And I told us the reason that you don't buy at resistance, you only buy at support. So I'll wait for the market to come back down to this resistance around this level, and I can look for buying opportunity. And as you can see, the market is actually coming down, but I'm not too okay to start buying at that level. Yeah, this level is, I want the market to really retrace down. Now, one thing you need to know about the market is that the more the market retraces, the more move it takes, the more impulse move that you will see after the retracement. It's like taking a deep breath. So retracement is like the market taking a deep breath, then for it to give an impulse move. So the more the market retraces, the more momentum it will gather. So now I don't really like this price because it has not retraced down. I want the price to come a little bit to this level, then I can consider taking a buying trade. Or there's something else you can still do. You can actually draw a structure like this to actually guide us. But okay, let's see. Mm, okay, I think I'm going to remove this. I don't really like the structure. It's not too okay. So let's just wait for the market to do some deeper retracement to this level. Let's look for the market to do some deeper retracement to this level, around this level. Then we can look for a buying opportunity. You know, when I mean a buying opportunity, I told us sharpen the price between support and resistance, waiting for the market to retrace back to that level. Then we'll look for a bullish engulfing candle if it is to the upside, or a bearish engulfing candle if it's to the downside. So these are set up for tomorrow for this pair, and let's watch out for what the market will do. If it breaks down to this level, retest the level and give us a good price action retracement with a bearish engulfing candle, then we can take a set trade to this level. Now, always target zone to zone. Always target zone to zone. It gives you a good risk reward. It gives you, you can get 1:10, 1:12, and you just need one of those trades in a week to actually have a profitable week. So always target zone to zone. Okay. So now, if the market gives us some level of break of structure around this level, then we should take uh, a buying trade and target this zone. Okay. Now I know somebody might say, what about if the market retrace back? Now allow the market to do what you want to do. Now just allow the market to do what you want to do. Now let me give you an instance. If you take a trade here, you took a trade at this level and you targeted this level. Now if you notice, the market broke at, this is Friday 5th of June, and the market got to the level around 24th of June. So about 19 days. It took the market 19 days to actually get to that level. Now, many traders don't have that patience to actually wait for 19 days. Okay, they will just be entering a lot of trade. The market will stop them at they will enter again. Stop the at, they will enter again. No. Now, if you enter this trade and you just allow this market, just leave your stop loss. Just leave it. Don't try to, it depends on how you trade. I'm talking about swing trading. Don't try to break even, because once you break even, the market can come and stop you at. Just allow the market to run, because that is why I always advise that you trade small. Always trade with the amount you are willing to lose. Okay. Many a times why we easily close our trades, why we easily take our profit, is because we are risking too much. If you are risking 2% of your account and you took a trade there, yeah, let's see the risk reward. Let's assume this is where you enter the trade. This is your uh, stop loss. Now let's see. This is now this is 1:, okay. This is 1:7. This 1:7. So if you enter 5 of this kind of trade in a week, and just two of those trades actually got to the next zone, you are sure of covering all your losses for that week. Well, that's not what we are doing today. That's is a training for another day. But I just want to advise us, always target uh, various zones, target from zone to zones. Okay. So now let's see what this market will do. Around this level, let's look for buying opportunity. Around this level, let's look for selling opportunity. But if the market break out from this level, that does not mean that you should start selling. I always say this, it doesn't mean that you should start selling. It can be a fake out. So always watch out for fake out. That is why you should wait for a full candlestick retracement and a candlestick engulfing candle to confirm that retracement to the direction where you want the market to go before you enter a trade. So that is that for AUDUSD for the 8th of June 2026. Okay, so do well to subscribe to this channel so that you don't miss out from any of our daily analysis. And also note that this video is for educational purpose only. To always do your own analysis. See you in the next analysis. Bye.